Bob Pisani has our ETF Edge today, and we're focusing in part, Bob, on this one.
Yeah, and big holdings in a lot of ETFs. Thanks, Scott. I've got Dave Nadig here from ETF.com. Kevin O'Leary, of course, chairman of O-Shares ETFs here as well. Nvidia sinking 14%, wreaking havoc on the chip space. The SMHs, the SOX, all the other semi-ETFs all getting crushed today. Nvidia sitting in more than 200 ETFs. So how should you play that space, or is it time to stay away? And Dave, this is a good example. We like to educate people. SMH, we talk about it all the time. Market cap weighted, and when you get 5 stocks that really matter, including the Nvidia, you're talking about 5 stocks with 40% of the market cap of the SMH.
Yeah, and this can be part of the problem with sort of blindly owning a sector, right? I think cases like this are a good place to look for some sort of tweak, some sort of edge, pardon the pun, that's going to help you navigate this, and there are ETFs that do that.
Yeah, and Kevin, you're not a big fan of SMH in general and semis in general, but you also, we've had this discussion many times, you're not necessarily a big fan of market cap weighted indexes either, which is what the SMH is.
Yeah, I'm against that because it blindly leads you into a very concentrated portfolio when the whole concept of an ETF in the beginning is to provide diversification. And so many of the early ETFs are market cap weighted where 10 stocks are 40, 50% of the index. Yep. That is not the essence of a diversification, and so I'm against it, you're right.
Yeah, and you've also had some negative thoughts on semis in general, largely on what's going on post-Apple.
Yeah, I do not want to own semis going into the Apple print. The weight, in my view, on Apple now is much a show-me stock. If units are no longer transparent and they're opaque, and we get the sense from Apple's numbers, as they've already pre-guided, that we're going to be light on units, it's going to make grown men weep in the semi space because the multiplier effect is going to be brutal.
And yet, Dave, there are alternative ways. You can own semiconductors, not just market cap weighted. We have one we want to show you, the First Trust Semiconductor ETF, weighted towards things like liquidity, 30 semiconductors that have the most liquidity, and some other factors in them. So you don't have to buy
you can get these sort of greatest hits of smart beta approaches. FTXL is the fund we're talking about. You know, it's liquidity, value, growth. These are core sort of factors that people can look at, and it brings down the exposures in stocks like this. In this case, Nvidia isn't even part of the portfolio.
And not even in it. That's very interesting. So I guess the key takeaway here today, Kevin, is earnings still are too high to account for the slower global growth. Would you say that's the story from Nvidia and Caterpillar?
Well, Nvidia had the uniqueness to talk about the gaming sector as well as the drawdown as a result of crypto collapse. I mean, that was a unique story. On the way up, this was the rock star darling, and the PE got crazy, and you could argue that the volatility remains in that sector. Now it's really hurting you. 14% declines in 1-hour trading sessions decimate a portfolio.
That's pretty tough. Thanks, guys. Appreciate that.